Hi everyone, thank you for tuning in to our January recap. We're going to go over how the portfolio has been doing, looking at the economic conditions, and then first we'll start off with a little update over the club. So good news, the portfolio is currently at an all-time high, over $1.2 million now. We ended the month of December over $1.1 million. And then we did receive a donation, almost $80,000, which helped put us over the $1.2 million mark. We have been connected with BlackRock's 360 elevator platform, which is connected to the BlackRock's Aladdin technology. We're hoping to use this to help increase our risk analysis and just looking at how we can change the portfolio to increase our performance. And then myself, Josh here, and 3 other of the DCM members have been working on a CFA research competition. With that, we did a big stock research report on John Deere. And then in mid-February, we will be spending some time presenting our findings to a board of CFA professionals. And with that, I will turn it over to Josh.
Hello. Let's get into it. Yeah. So currently our portfolio value is at a little over $1.2 million, and our cash is at $82,000. That'll be something we'll be looking to spend in the near future in our meetings. Over the month, our portfolio went up about 1.2% or 12,000. Sadly, this did trail the S&P by about 0.5% over the month. This is partially due to due to the fact that our portfolio is overweight in real estate, which we'll explore with some of the stocks and our biggest movers. So while the general market was up about 1.6% in the month of January, real estate investment trust and real estate in general was down more than 3% due to rate falls not occurring as expected in the market. We hit more than our share of the downturn with Public Storage and CBRE Group, as they both went down around 7%. And then Allstate has been growing over the past month on some positive sentiments. We'll see if they continue into their February 7th earning call. And then Stryker had a really positive earnings call on January 26th that forecasted a very good positive earnings growth. So we'll continue to monitor them and look for success in the future. Yep. So this is something I kind of came up with a little bit ago. So we have the DCM superlatives for the month. So looking at the standard deviation of the returns of the stocks. For the most volatile stocks over the last 2 weeks, our most volatile stock is PayPal. And if you look back a little bit farther, since their October purchase, Crocs is our has been the most volatile stock in our portfolio by a good margin. The largest dividend of the month that we received in January was from Digital Realty Trust. That was about $270, and they pay about 3.5% dividend yearly. And then what I termed kind of the portfolio stinker is Disney. We bought them in October 2021, and they're down about 32% since then. We've kind of looked at selling them here and there, but we'll have to continue considering that in the future. Here's Sam.
Yeah, thank you, Josh. So we're going to talk through what's been going on in the economy for the past month. This was an exciting report as we were able to sort of talk about a lot that happened over a break, happened over all of January, and then moving into the new year, which will be a fascinating year in the economy. So with the January Fed meeting, rates did hold constant again. Unemployment remains low, but the main thing we highlighted to the club was, at least in looking over the Fed minutes, the Fed really wants to get inflation down to 2%. And it's something they stressed with not being just totally stagnant, with it being at like about 3.5%. They want it to get all the way down there. So that's something we need to be aware of and what could come with rate hikes in the future. a lot of worldwide stuff has gone down throughout the month of January, specifically with the war that's going on in Yemen, with attacks on supply ships causing most ships to be rerouted around the Cape of Good Hope instead of through the Suez Canal. So we talked about how that may affect the market going forward. And then we talked about the United States' response towards it and how the economy has sort of noticed it, but more so in Europe, and we've been basically unaffected by it. But another thing we really highlighted is just how resilient the economy has been. It's been something that's been good to see. Almost every meeting we talk about another uncertainty that happens, yet the market continues to be resilient, and that's something that we talk to the club about in terms of our strategy going forward. And then another thing to just watch, it's something that we're going to try to do for a lot of the newer members in the club so they can do their own research outside of it, really be growing in all areas, just things they can be looking for in the upcoming weeks, whether it's the CPI report looking at inflation, what's going to be happening across the consumer price index, and then the jobs report as well, which would be a great indicator of just really what employers are thinking of the current market. That'll have Hunter wrap it up for us.
So thank you guys again for tuning in. We look forward to continuing improving our investment strategies, and just thank you for all your support.